Hello, everyone. Welcome. My name is Brian Dunwoody. I have Alan Asp with me. This is the
Welcome.
FTM Trading Podcast. How's everybody doing? I feel bad because I know a lot of you reach out to me, and I haven't touched base with many of you in a while. Been focused on the app, been focused on the website. And with that said, I really haven't been trading. I pay attention to the market here and there. I heard someone talk about a death cross. And for those of you that don't know what that is when the 50-day moving average crosses below the 200-day moving average on a daily chart. And that is a bearish signal. So it'll be interesting where we go. Here's the SPY on the daily. I think we're heading down. We have this. Look at this. Here's a shoulder, here's a head, here's a shoulder. If we look at the Dow, look at this 200-day. It's almost like a magnet. Tagged here and bounce, tagged here and bounce. I wouldn't be surprised if we head down there. We'll see. We had a pretty rough day today. Maybe we'll get a relief tomorrow, get some buyers in the market. So I'm still plugging away at the iOS version of the app. It's close. So for you guys that are testing it, the end may be near. Just kind of keep that in your back of your mind. Personally, if it was me, I would be on the Android version, only because for me, it seems a little more stable. It seems a little more concrete. That Android version has an 18-month history, whereas this iOS version is, a month in development. So it's still kind of a baby. But like I said, that's just me. You guys that are testing, thank you so much for your feedback. It's been invaluable. And I think, we're getting close to the end of the period. So keep that in mind. Hope you guys had a great test with it. I hope it helped you a lot. And I'll keep you posted. So sounds good. I don't know, Alan, what are your thoughts? Uh-oh. I think we lost Alan.
Go to the middle of the chart. Let's see, right there. Go to the middle. There you go. So you had two basically down days and then a bounce up. Then you go a little bit further down, 2 days down, bounce up. I think we open 200 points up tomorrow. Now, some people would say, what happened on the 15th? And that's a good question because what drove the drop today was something that I don't think anybody can control. I think the oil prices are getting way too high, and I think interest rates are pushing higher. So I think that people know that those are two things that will go ahead and stifle any economy, and will go ahead and bring inflation that people can't go ahead and buy and sell like they'd like to. So, these prices of oil I haven't seen in years. This is like just crazy. $85 a barrel. You're talking like that's just a huge difference there. So I think the more oil goes up, I think the market's going to drop in correspondence just to go ahead and do that. You see how far XOM is extended. I was long XOM, 50 contracts earlier in the day. It broke the 5-minute high and I went short, and then I went back long again. So it was an interesting day for XOM. just because it moved a lot today. Is that today?
Yeah. Here's a,
Yeah, I mean, look at that low at about 1 o'clock. And then it made a pretty nice comeback. It was actually pretty high. Than the last hour, it took it back again. So it was just kind of a weird day.
yeah. Yeah,
So,
I think people are, I think people see, the negative aspects of the market, but yet there's nowhere else to be. I mean, you gotta invest somewhere.
yeah,
Well, I think people are looking for buying opportunities.
I had a conversation with an investor yesterday. I was sitting on a couple million, and they're like, "I'm going to put money in the market." I'm like, "Really?" It's like, man, we're like maxed out. I said I had told the group in January, we usually have at least 1,000 point drop. I bet you the last 10 days we probably dropped 1,000 points, pretty close. I had told some of the people in the group about that, and they were like, "Huh?" It happens every January. It's not anything unusual or abnormal. The reason they do that is they take profits, because obviously last year the market was up 20 to 30%. They're taking the profits, and then they don't have to pay until this year. So that's why they do that. So, yeah. Um, the what's really amazed me, and I don't understand it, is the banks. Banks have had great earnings, and they're all below the 200-day moving average. I don't even know the last time I remember JP Morgan Chase being under the 200-day moving average. Bring that up, JP Morgan. I mean, it's just getting annihilated. I've never seen anything like it. JP Morgan, yeah. No, oh, you got the finance. Oh, you hit go.
It's
There you go.
coming.
I mean, look at that drop.
Wow.
I mean, it went from 170 all the way down to 151. Talking 20 dollars. And look at that 200-day average. It's like well below it.
Yeah.
You got the 200-day up there, yeah. So that's pretty severe. I mean, literally that's very rare to have that happen. So I was actually long JP Morgan Chase after the drop at 150. Yeah, it didn't really pan out too well, but I mean, it was a break even, but I thought JP Morgan would rally the last hour or two. It did rally, but only $1. Yeah.
Yeah.
So
Well, rising interest rates are supposed to be good for banks.
this is what I'm saying. So why are the banks just getting annihilated and killed? I don't get it. It doesn't make any sense to me. I know that's what I'm saying. Interest rates, and the thing is that I've talked to the Federal Reserve before. It doesn't even make sense that they're raising interest rates, because when they raise the interest rates, it makes the debt get that much more out of control. And then all we're doing is paying more money to borrow from ourselves. I mean, we have a massive debt, and I don't know if anybody's going to ever address it, but
Yeah.
I mean, nobody cares. So I don't know.
Well,
But if,
when I came across a website that most of our debt's owned by our government, which seems kind of
oh,
strange because it's our government taking the debt, or writing the debt. So
no, you don't get it. They're
yeah.
buying the debt because nobody else will. See, China used to do it, and then China owned a lot of our debt, and then they sold it off because of the trade wars going on with China and the U.S. So they
Yeah.
did that, and then the other thing is that we don't have a choice. There's people that don't have this kind of money that could buy trillions of dollars and roll it over and put it back into the debt. So yeah, no, literally what happens with the Fed, they go ahead and buy the debt up, resell it, repackage it, and put it back out there. So they're literally, to my knowledge, they buy it the majority of the debt.
Yeah. I
So
think
now
there's,
when you raise the interest rates, now you go ahead and your debt goes even that greater. So it's not really good. I don't know. I don't think that has anything to do with what's going on. January, it's usually always like this.
yeah,
To
I think that that thing is much bigger in scope. It's not a specific to this month, specific to that month. It's basically looking at our long-term future. And I think Social Security is a big one that owns part of that debt. It's, I don't know. I don't see us, I don't see an easy way out of it, to tell you the truth. So um, we'll see.
Yeah, what would have to happen, which they won't do it, is that a lot of our spending goes to foreign countries. I don't even know if you know that, but if you Google it, that the amount of money that we give to Central America, to Mexico, to Ecuador, Chile, just all over the world. I mean, I don't understand why we're giving away, millions and millions of dollars to Colombia and other countries when we don't have any money to give to anybody.
Right.
we,
Right.
we can't even pay our own bills or
Well,
pay
yeah.
our budget.
Let me let me put that on my credit card. Yeah, right, exactly.
Yeah. So,
Hmm.
but it's the way it's been for years, and it's the way it's going to continue. And I guess if nobody has to address it, then it won't. So,
Yeah.
but how it regards to the market right now, I don't think that's what's the interest rates are causing the downturn in the market. I think it's oil prices. I think that if oil continues to go up, UPS, FedEx are going to be good plays to short. Companies that are trucking companies that do that, they can't raise their prices quick enough. They're good ones to go ahead and get, that because if you already got these contracts out there, and then you have to spend all this money, then the problem is that you're going to go ahead and see it in your bottom line. So
Right, exactly. Yeah. Yeah. Oil is a big component of the CPI, or our pricing
yeah.
and inflation. So
Uh-huh. So all right. Well, it sounds good.
yeah. Sorry to leave you guys on such a downtrodden note, man. um, so yeah, let's leave on a positive note. I'm can't wait for this iOS version to come out. So I hope you guys have a good. I hope you guys had a good Martin Luther King Day off. Hope you guys have a good rest of the week. As always, if you need to, reach out to me. Hopefully you guys know how, and we'll talk to you guys soon. Thanks, everyone.
Yeah. Go ahead and use the app.
Yeah,
Helps me every day.
definitely.